you all for joining us.
Thank you, Jeremy. Hello, everybody. Hello, Faisal, Neil, Roberto, Sira. How are you? Good to see you today.
Good
morning, everybody.
Great to see you again. So, lots of questions, back to agenda. So I believe that we should start with the questions right away, right? So let's start with, I have a couple of questions for all the panelists so the audience can get a sense of, the ESG topics that we're gonna talk about today. So ladies first, let's go with Sira, right? So the first question for all of you guys, but for Sira now, it's how do you and your firm define ESG? And how does it influence investments and project development? Sira, on to you.
Thank you, Federica, and thanks for having me here. Let me first introduce Jaguar EMP for those that don't know the company. So we are a young privately owned Mexican company that currently holds 10 onshore contracts awarded during the Mexico oil and gas rounds back in 2017. So we're focused on material natural gas development and present in Northeast, Southeast, Veracruz, and Tampico. So I joined Jaguar early this year, and my sole purpose was to define and consolidate our sustainability and ESG strategy. So in the past 2 years, we've seen growing sustainability and transparency focus and great pressure, as we all know, from the investment community, starting with the BlackRock letter to CEOs. But alone this week, I'm sure you all know, we had a few big developments, right, that came through this week with the Dutch case that literally means that climate litigation is now a material risk. And engine number one winning at least 2 seats in Exxon board. So these big developments mean that acceleration in these issues is happening, and we're moving fast. From voluntary, what used to be voluntary a few decades ago, to regulated commitments. So corporate accountability is at the heart of this debate right now. And I think that's a great sign moving forward. So for us in Jaguar, we build our sustainability and ESG strategy on the concept of and the vision of positive impact. And we design 4 pillars of positive impact. So for us it's going a little bit beyond sustainability, and we want to make a positive impact, which basically means to have the strategy operationalized in every single element of our management system and risk management system. So we have integrated the concept of positive impact and our purpose within this operating management system, which is critical. So for the time being, when I joined, what was a significant support was that this vision was born at board level. And I remember the first conversations when I spoke to our CEO, and he made it very clear the type of company that he wanted us to be. So although we're privately owned, we're getting ready to report next year. So we built a huge matrix of ESG performance data that we're going to be capturing and reporting on in the future. It's very important for us to be transparent and to learn. We're a small company. We're an SME, and we're just born basically. So we want to make sure that that's core to our performance. The fact that we are reporting through reporting and measuring, we're going to be able to enter that continuous learning and continuous improvement curve.
Great, Sira. Thanks very much for your answer. So let's go with Neil. Neil, how do you and your firm define ESG? How does it influence investments in project development?
Thanks, Federica. I think I should start by saying that I like the trillions, and I like it in the hands of women as well. Maybe as we look across Latin America and the big economies that are all having a lot of political turmoil, I don't know, is it a coincidence that they're all male presidents? I don't know. I think I have to give because I know we have some press on the normal caveat that I'm speaking for myself and not for KKR necessarily. So if I say anything wrong, it's my fault. I think for us, we're a financial company, right? We manage around $360 billion around the world. We're stewards of other people's money. So job number one is our fiduciary responsibility to those retirees and other investors who trust us to deliver attractive risk-adjusted returns. Now, the good news is that stakeholder responsibility, which is really the core of ESG, is really about being responsible to the many communities we serve. And fortunately, these things go together. In our experience in having a sort of ESG in many forms, but an active ESG program since 2008, we've seen that when you incorporate ESG into everything you do, you get better results. You get a more motivated workforce, right? You get happier investors. You get happier policymakers. You get happier communities. So it's a win for everybody, and you don't actually have to sacrifice returns to do it. To be successful, I think there's a couple of things. One is that it has to permeate your culture, right? This is something that has to be part of everything you do and every conversation you have. It's not just a add-on office that kind of throws in ideas every once in a while. It's part of everything you do. And the second is that it has to be systematically integrated into your policies, into your procedures. For us, that's an investment committee process. That's a portfolio management process. And what that looks like in practice is that it's part of how KKR itself runs. So KKR Inc., the enterprise, how we run our company, how we treat our communities. Second is to integrate it within our DD, our diligence process from day one. Full integration, clear metrics, good partners to help us evaluate it. Third is how we inform, how we manage, how we participate in our portfolio companies, the companies we own and control, and the companies we partner with around the world, to make sure that those companies are also incorporating those ideals and you have good alignment. And then third is that you can invest a tremendous amount of money at attractive returns by investing behind ESG themes. Not to be too, I don't know, within this group, but we have Faisal here. We recently partnered with Sempra, a fantastic energy transition platform that is I'll let Faisal talk about it, but basically you're displacing coal in Asia and you're cleaning up the Mexican energy sector. That's a tremendous opportunity, and there's so much more to do. And then, Federica, with ERM, we recently announced acquisition of ERM. We won't let you, you don't have to brag for yourself or brag for you. This is the global leader in helping companies figure out sustainability. It's a tremendous opportunity. Now, you asked about definitions. There's no single definition. We sign up to a number of external principles and metrics, that the principles for responsible investment, the Sustainable Accounting Standards Board, for climate, the Task Force on Climate and Financial Disclosure and Recommendations. There's lots out there. We measure ourselves against them. I would say though that there is a gap here. I think the industry really could use some more, some clear standards that we all ascribe to, we all measure, we all are transparent about, because because ESG has become so trendy. You have a lot of players out there claiming to be ESG friendly, but not necessarily, having a common definition. And I think that in the end can be a real drag on the sector.
Right, absolutely right. Thank you, Neil. So, what are your thoughts on this, Faisal?
Sure, thanks.
What is ESG for you and your company?
Yeah, thanks, Ferry. And I won't repeat everything Neil said, but definitely appreciate our new partnership with KKR, and certainly I agree with sort of how ESG has to permeate the entire culture of a company in order to get the best outcomes for all our stakeholders. So I'd say simplistically, ESG for us, it's been a focus for us for decades as a company rooted in California. It's definitely a critical input into how we do business at Sempra. And just to give you a background at Sempra, we really do appreciate being a part of this conversation here. We have 19,000 employees across our utilities in Texas, California, our assets in Mexico, and the Gulf Coast here in the U.S. So appreciate being a part of this conversation. At Sempra, we just published our 13th consecutive corporate sustainability report. So on the E side, our goal is to lead on improving the environment while delivering energy safely and efficiently to all our customers. On the S side, both social and sustainable, I'd say that every day our employees come to work ready to engage with all of our stakeholders to make sure we meet the expectations of our communities. And as an infrastructure company, we need to make sure all of our infrastructure efficiently and effectively interacts with our social and economic infrastructure, right? We see that you have the natural infrastructure that exists. That's kind of the land we live on, our coastal ways, our ports, and then you've got the social environment, which is our hospitals, schools, the places we live, and then you have the economic infrastructure, which is it's your electric and gas distribution, it's your rail lines, it's your public transport. So all those things have to kind of interact to create that natural compounding effect that benefits the overall community. And on the governance side, we do make sure that we do business in a transparent manner with the highest degree of an integrity. And at Sempra, we always do the right thing. So it's sort of a part of our culture and a part of our workforce and how we manage the business. In terms of how we invest, the ESG framework is sort of part of our enterprise-wide risk management framework that we use at Sempra. So it's integrated into that whole process. It's also integrated into our capital investment process and our screening to ensure that we're aligned with all those priorities. We also, when we go out and finance our projects in the capital markets, we look at the Equator Principles and how those are evolving over time. So it's definitely a critical part of how we invest, and it's why at our utility in San Diego, we're one of the leading companies in the nation when it comes to delivering renewable power into the city, along with the highest rooftop penetration of solar panels across the country. At our gas company in Los Angeles and across all Southern California, we have an aggressive goal of getting 20% renewable natural gas into our gas procurement. And then in Mexico, we have over 1,000 megawatts of renewable energy, growing to hopefully another 4 gigawatts over the next several years. And then in our Gulf Coast LNG business, we're displacing coal across the world and how we deliver LNG to our customers.
Thank you. Great insights, Faisal. Thank you. And last but not least, Roberto, glad to hear you.
Thank you, Federica. Good morning, everyone. And thank you to the Institute of the Americas for having me back in La Jolla. Even though I wish I was there physically, it's great to at least be here virtually. There's not much I can add to Niels and Faisal's and Sarah. I think that, I couldn't agree more with all that's been said. I only can share a little bit about our company and what we've done. And it's sort of ingrained in our DNA. We are an energy solutions company, essentially. We generate, transmit, distribute power in the Caribbean, Central American, South American region. And ever since I've known, and our founder, Rolando Gonzalez Bonster, has been in the DNA of about this ESG being so popular these days. In the mid-90s, we started measuring wind in the Dominican Republic, for example, and we're the pioneers in wind farms here. Similarly, we've now are recently pushing electric mobility and are putting the chariot ahead of the horses. to ensure, even though it's not a business per se now, we want people to feel confident that they can reach their destination. And we've deployed our solution now in the Dominican, in Jamaica, and in Panama, and hopefully we'll continue doing that. So I guess it's just more of putting the money where your mouth is and realizing that you can make changes if you really believe that this is a win-win situation for everyone. I particularly think that, why would not anyone want to save on electricity consumption or on water consumption? It's just a no-brainer. And, our previous speaker earlier was mentioning some of the things that resonated a lot with me, in the sense that, why wait? Why wait? It's here now. And whoever says it's expensive, it doesn't know what they're talking about. And quite frankly, there are a lot of ways to take advantage of this. So in terms of the ESG for our group, I mean, it's something that, as I said, is ingrained in our DNA, and both, or actually the three letters on ESG are quite embedded into what we do every day. Every single decision that we make, we see the curve in some of these things. I just mentioned this latest solution on electric mobility where we're doing this deployment. However, we've done similar things. We're the first company in the region probably to have a smart grid. 100% of our customers are operating under a smart grid. This empowers our customer to have control of their energy consumption and creates a consciousness that allows them to be more efficient in their energy use. Similarly, in one of our companies where most of our customers are hotels, we've developed a district energy solution, which is probably the only one in the Caribbean, where we are taking the exhaust gases of our power generating plants and are now using what used to be a waste. We are using that to turn it into heat and cold. Cold being used for air conditioning, which is something that, as you know, in a hotel in the Caribbean, it's not a luxury, it's a necessity. So these are some of the examples.
Pursuing lots of interesting opportunities in carbon sequestration, potentially hydrogen, potentially ammonia, all these kinds of things.
Great, thank you. Faisal, how about you?
Yeah, no, I appreciate the question, Federica. For us, we do believe that electrification is a hard trend, along with more renewable energy being put on the system. So for us at Sempra Energy, through our assets in California, in Texas, and in Mexico, it is, grids. And then I think our focus, through our other networks is to decarbonize the industrial manufacturing, as well as long haul and heavy duty transports through hydrogen and carbon sequestration. So, and I think to couple all that together, we also are investing in making sure that we can deliver affordable LNG to our customers transitioning away from coal. So for us, it's investing in the electric grids across our service territories, including the border between the U.S. and Mexico. It's investing in carbon sequestration, which we're doing right now in our infrastructure business. We're testing the geology and drilling wells in order to understand, how much carbon we can sequester in that region around the Gulf Coast. And, one of the things that someone told me a long time ago, a very astute CEO in the oil and gas space, is the best places to find oil and natural gas is where you found them before. And so I think that going forward, the best places to find areas to sequester our CO2 is probably where we found hydrocarbons before. And so the Gulf Coast and parts of where we've historically found oil and gas are going to be, I think, the areas where we can efficiently sequester some of those hard to decarbonize sectors in the industrial space, which also happens to be where a lot of our power infrastructure and industrial capacity is across the U.S.
Thanks, Faisal. I don't know if Roberto or Sira have anything to add to the guys with regards to this question.
I don't.
I leave it with the experts.
Okay, great.
Exactly.
So we're moving on. I believe that we have around 10 minutes for questions from the audience. But I wanted to ask you the four of you, the one last, wild card here, and here it goes. What energy segments will you no longer finance? Is it coal? Is it oil and gas? What are your thoughts on this? Anyone?
Yeah, I could take a swing at that. So we did sell. We used to own coal-fired power plants over 12, 13, 15 years ago. We sold out of those plants as we saw some of the transition coming with natural gas and the abundance of that fuel and some of the trends in electrification. So it is an area that we have divested out of. We know we don't invest in oil in primary oil extraction. I think that's something that we're more of an infrastructure company. We own the transmission and distribution lines, so we've tried to stay away from primary generation and primary energy extraction.
Thank you. Anyone else? Neil.
Yeah, we don't invest in coal. That won't surprise anybody for a major finance firm. It's very hard to finance coal these days. We do invest in gas. We see it as part of the energy transition solution, and we do have continued investment in oil. The oil market is changing quickly, so the calculation of what oil assets make sense, what are competitive, what are not. So in that space, on the upstream side, it's primarily in existing production and really trying to ensure that production is made in a very as clean, as responsible way as possible. But to one of the points made earlier, to ensure that the best oil, so long as we need oil in the global economy, is from existing resources. And so we think that we can play a very important role in maximizing use of the resources already under development in a clean way. Things like methane controls, and that kind of. Rest of LATAM, I look at the economics of the upstream. I just don't see them for a financial player with our kind of risk profile. I think that it's I think that there certainly are resources. But it'll be a different cost of capital, and I think that, as I said before, I think that there are a number of upstream resources that effectively in LATAM that are effectively going to be stranded resources at this stage. The boat has sailed, metaphorically anyway.
Thank you, Neil. Anything from you, Sira, Roberto?
Not from me, Erika. Thank you.
Okay, so let's move on to the questions from the audience. I see that there are 2 questions in the Q&A. So I'll ask the question, and if you want to answer, just let me know. So here's the first one from Emilio Godoy. How can be avoided that ESG become green social washing for corporations?
Yeah, I mean, I think we take that question very seriously. I mean, it's when we have 19,000 employees. They all live in the communities that we serve, and for us, there's no, we take any sort of assertions that of us trying to greenwash as pretty serious. I mean, we take a lot of time to go through our investment processes, our screenings. We work with the board to make sure that all the capital we're spending is done in a socially responsible manner with the highest level of integrity, with a keen sort of view towards providing an environmentally sustainable outcome for the communities we serve. So we take this very seriously because it goes back to the compounding effect of the places we live in. You've got your natural environment, you have your social infrastructure, and you have your economic infrastructure. And for your economic infrastructure to have a license to be able to operate in those communities and in those environments, you have to take environmental, sustainability, social, and governance issues very seriously, and that's something it's very near and dear to our heart.
Thank you, Faisal. Neil, anything from you?
I think Faisal said it well and would agree with everything he said. I would maybe add one piece, which is that this is something that I worry about for the industry, right? And I do think that we need common standards, standards of metrics. So this becomes a very data-driven exercise, standards of transparency. And if you can achieve that, I think that you'll be a lot more credible, and you'll help identify those that are doing greenwashing. Having said that, of course you know that you can have all of that, and people will not agree, but that's fine. If you can have a common base of data and transparency, I think that that'll take us a very long way.
Thank you, Neil. Roberto Sira?
No, I think Neil and Faisal said it all. I agree.
I mean, I'm going to reinforce the transparency element and the fact that it needs to be born from the operations. So, and it's not just the way you communicate what you do and how you do it, and the performance metrics that you disclose in align with all the diversity of frameworks that we have. Is really with all the stakeholders, so including communities, the government. So the effort of disclosure and transparency throughout different channels of communication need to be optimized. I mean, it's never enough. It's never enough to explain how you do things, to get your feedback, to enter that continuous learning and improvement. Because I mean, we might think that we know it all when we pull together TCFD, UNGC, and all the metrics together. But there's always creativity, right? So, for example, we're very much focused on D&I data, capturing that D&I data that doesn't exist really in Mexico. It's not really being reported. So for us, that's a game changer. And all the metrics that can give us a sense of how we are impacting poverty levels. That's something new. So one thing is aligning with what exists. Other thing is that we can always find new metrics, which may not be requirements from rating agencies or big frameworks, but we want to report on them because they're material to us and because we want to improve on them.
And then going back to Emilio's question again, is how do you avoid it? And so there are these third-party agencies like Sierra just talked about, and then there's a growing group of them, right? So it's not just S&P, it's not just Bloomberg, it's more and more companies are going out independently assessing the ESG ratings of companies. So I think that will help sort of police, what companies are doing in some way, shape, or form.
Okay, thank you. So let's have the next question. It's coming from Karin Torres. I believe she's from ERM. Yay! Many countries lack regulation to take advantage for sustainable bonds linked to accelerated climate transitions. How could the private sector promote its implementation?
I can take that. I think it's, I said it before, it's if a company is committed, and I mean, we're on the brainwashing issue, it makes sense. It makes sense. What's the problem with doing something that you're saving at the same time you're making money? So it's a win-win for everyone. If you're helping the environment, what difference does it make to you if you're doing it because you're using a green bond or you have some sort of incentive to do it? The important thing to me is that you're actually helping reduce your emissions and lowering your footprint. So to me, I think that the private sector plays a key role in leading these efforts with their investments. And regardless of what governments do, I mean, as I said, we went ahead in the Dominican Republic and built our wind farm when the wasn't in place yet to allow for the exemptions or the exoneration of duties for example, or where there was no contract, and we just did it. And after that, everything sort of started to move forward. So I think it just takes action and a decision. If you really believe in this, and you have the resources, of course, because it's important if you don't have the resources, just go ahead and do it, and you know, everybody else will follow, and the regulation will follow you. We've launched our e-mobility initiative, deploying these EV charging stations without any regulations. We'll adapt to them when they come out, but if we waited, we're probably going to be sitting down here, you know, forever when the bureaucracy. In the meantime, we've managed to grow the electric vehicle usage in the Dominican Republic by 3,000%. Why? Because we created a trust so people can take the leap and switch to an EV. I mean, just an example. I don't.
Great.
I'd just add quickly that this is one of the reasons. I think Roberto's exactly right. You sometimes just got to plow ahead. But I think this is also one of the reasons that Latin America really needs more private capital. Obviously, as a source of private capital, that's a self-interested thing to say. But whether it's us or our peers invest, you know, and we're investing equity, we're also pulling debt with it, you know, and whether that's, you know, lending or whether that's bonds, and we can pull those from international markets at much more attractive rates than companies can get. Many companies can get directly that are in LATAM. So it's a way to bridge the needs in LATAM with what is a truly global debt community.
Great, thank you. So I don't know if Jeremy, are you there? If the audience wants to make some questions, live questions.
Well, we'll invite them to share any questions with folks in the virtual lounge, but let me congratulate and applaud the panel. Federica Salazar from ERM, wonderful job moderating. Thank you so much. Neil Brown from KKR, thank you. Roberto Herrera from our steering committee member InterEnergy. Sira Corbetta from Jaguar, thank you, and your sponsorship of La Jolla Conference. I think, did we lose Faisal's connection? Well, thank you, Faisal, and to you and Sempra, as always, for your amazing support of the Institute of the Americas and the La Jolla Conference. I typically want to ask a yes or no question, but I was going to ask about the greenwashing, and so that you've discussed that so well and offered such important responses to that. I won't put you, because I was going to ask you, is there greenwashing happening, yes or no? But I think you've all answered that directly. So you get off the hook. No yes or no question. Thank you all again. Wonderful session. Extremely informative. It's amazing how much ground we cover in these sessions. I'll invite everyone now to the virtual lounge for a short break, and then we'll come back for our final panel in our final discussion. Thank you all again. Fantastic. Really appreciate it.
Thank you, guys. Thank you very much.